Hello traders, I hope you guys are all well. Hope you guys had a lovely weekend and a good trading week. We're going to be getting quite active on our YouTube channel where we're going to be starting different series for different days of the week. So I thought we'd kick it off with Sunday. So every Sunday we're going to be doing a formal market recap of the market, what's happened in the last week. And that's basically going to go over some of the trades we sent on the public telegram or to private members, how the market moved, and then the outlook for the next week. On Mondays, we're going to be talking about money management. So that's going to be an entire series that's going to be dedicated to talking about the risk management side of trading, which I don't think is emphasized enough in trading communities, because you can have the best strategy in the world, you can have the best edge, the best system in the world, but if you do not have good money management or an ability where you are planning how you're going to scale your accounts, you're always going to end up coming back to square zero and feeling like you're not making any progress. So I think that series is very important. On Tuesdays, it's going to be our technical Tuesdays. So that's where we're going to dive into a topic on from the technical side, and we're going to look at that topic quite in depth. So it could be something like the daily cycle. So we might be diving into different times, how the daily candle prints, etc., and giving you a real in-depth flavor for that particular technical topic. There are a lot of technical topics that we can go into, so it's going to be a series, I think, which a lot of you guys will appreciate with all the other stuff that's going on. Wednesdays, we're going to dedicate to psychology. So this is where we'll pick a topic on trading psychology, because the journey of becoming a profitable trader is obviously very long. It can be very rewarding, but we know it's hard. And obviously, once you get to the top of the mountain, there's different psychological problems that you'll face. So we'll be sharing some of our experiences and going through picking a topic based on psychology and uh, taking a deep dive and potentially providing you some tools how you can better manage your mental state so you're always feeling good and ready to attack the next trading week. Thursdays, we're not going to be posting a video. We're going to have a bit of a break. And then on Fridays, as the page progresses, we'll pick a question from one of you guys on any topic. That could be any topic related to what we've spoken about, technical topic, psychology, and we'll be addressing those questions in a video. And then Sunday, again, the week will start over. We'll be doing a formal market recap on the markets, where we will go over a couple of pairs. Most traders trade the same currency pairs, so we'll be going over um those pairs and reviewing what's happening in the markets and giving our insights into what's happening next. So to kick off, I hope that's clear. So Sunday, market recap. Mondays, we're going to be talking about money management. Tuesday will be our technical Tuesday. Wednesday will be psychology. Thursdays, we won't be sharing a video. And then Fridays, we're going to be addressing any question, picking one or two questions from you guys and putting them out in the video. And yeah, so I hope that was clear. And so yeah, to kicking off our first market recap Sunday, obviously we know the market has been extremely volatile in the last couple of months. There's been a lot of movements that's been taking place. A lot of the asset classes are at all-time highs. Continue talking about gold, US 30, the indices, and that's been mainly to do with the Fed's stance, where they have been indicating that they will be going easy on interest rates. But however, we do know that the inflation rate has still not come down to 2%. So it's still above 2%. I believe the last reading was just above 3% for the inflation, the core PCE. So inflation is still not under control. And obviously, asset classes are at all-time highs. They cannot go on forever. Eventually, the market has to correct because it has to pick up more liquidity or fuel to go lower. And obviously, the psychology of the market in the late trend or the highs or the extreme lows of moves, you're going to be getting people that are going to be feeling that fear of missing out. So investors who are going to come late into the trend and try to buy at all-time highs, which is going to be the exit liquidity for the banks to shift the market. So if we look at gold over here, we're going to go into different topics here, which basically indicate to us that a turn in the market is likely to happen, and it's all about probabilities here. So obviously gold, as we know, has hit all-time highs of 25, 30-ish, obviously psychologically above that 25 level. And if we were to ascertain and we'll look at what the structure is doing on gold, obviously we had some sort of bullish trend coming up as it's hitting 25 25 into that high point of 25.32. So we got a 4 hour external structure, external trend building. And you can see as price hit into that 25.32 level, the sellers came in quite strongly and they were able to break down this 4 hour structure point at 24.85.40, and we made a 4 hour external lower low. So that's the first indicator that the market is potentially looking to sell off, because this is a significant point of structure which the market has broken down. So that's number one. So once the 4 hour lower low was built, market has traded up in order to try and print the 4 hour external lower high. Obviously, this is quite tricky because they're going to throw traps in it. It's not going to be a simple case of where they, for example, there is structure building here. They're going to break down the structure over here and then just go up in a straight line. And then, you know, everyone will be able to get into the cells on the lower high. And, you know, life will be great. I wished it was that simple, but they are going to throw traps in the middle to try and confuse traders before the main moves happen, and what you guys have probably seen on gold in particular, that has been happening. So when price has been coming down above here, obviously the first thing to note here is we had a bunch of liquidity left across here with the Asia highs on gold as it broke down that 4 hour external 4 hour point. So that liquidity got targeted. Towards the end of August, we came up pretty much close to the external origin. We weren't at the extreme point because there was still a bit of room left, but this area where the market first initially stopped was a good zone, because obviously it's 50% of the liquidity void where that blue horizontal line is marked. So where they first tapped into it was a good zone of supply, but it wasn't the extreme. And you can see over here, price reacted off here, and it essentially also broke down the internal. We had internal. I go slightly lower time frame here. We broke down into. We had 30-minute internal structure over here, which I've marked out over here, building the 4 hour lower high. So if I had it diagrammatically, we had a trend coming up here on gold over here. We broke down over here. So this is the 4 hour point of external structure. Let me label this. And then, excuse my handwriting. So this is a 4 hour point to build the next 4 hour lower high with the continuation pro trend moves going to happen. You have a lower time frame trend. So we had first 15-minute, then we had 30-minute, etc. building here. So once this 30-minute broke down over here, we have got what? We have the internal time frame breaking down and also now becoming bearish. So once it's break down here, price tracked up back into the last supply zone over here. The issue also here is this is not the cleanest supply in the world, because it is framed on liquidity. You can see you have Asia highs here, right? So when we did send this trade on the public telegram, but one of the issues here is because of that Asia high liquidity, there was a possibility that price could possibly break through this zone into a slightly higher, because you have got a slightly higher supply level here at 50% of this wick into that zone. However, price over here, when it was building over here, with a slightly lower time frame, and we scroll up slightly. So we broke across 30-minute structure here. So we got a 30-minute internal lower low. In order to get the 30-minute internal lower high over here, price would have had its own internal trend. So you got a 5-minute trend over here, creating another 5-minute higher high, higher low, higher high, higher low, higher high. Over here, price came down, and then you got internal trend over here. So you got 5-minute internal trend over here. Price, when it hit back into that supply zone on that order block right there, did change structure over here. We broke down 5-minute structure. So We turned 30-minute bearish, and then we're turning the 5-minute internal structure bearish on the 30-minute leg that's building the 30-minute lower high over here. And once it's broke back and it came back into US London cross, you also had subsequent order flow shifts here, and you have a nice entry to sell off. So the idea was once the trade we sent over here, once we sent the trade over here, the idea was that the trade would continue selling off. And over here, you can see price began its nice bearish trend. We had nice bearish structures building. So we also have to, as price is progressing, we have to track the structures as price is progressing. So we did have 1 hour structure over here. And let me just mark it off here. We had 1 hour structure over here, which then broke down, which meant that obviously as price is progressing, the 1 hour structure is now bearish. And this was a segment of scaling, which also was sent on the public telegram. And potentially the idea was that now price will go on to knock this 4-hour external lower low. However, midweek this week, when price came over here, what it did was that because of this Asia high liquidity sitting over here and also equal highs, there was also a possibility that price was going to attack and sweep this liquidity one last time, that this really wasn't just an inducement to get early sellers in. And this is very complicated because, as I said to you, they weren't going to build that 4-hour lower high in a straight line. They were going to throw traps. So this was possibly a trap to trap early sellers and essentially get them trapped and also then take them out, which is exactly what happened. So if you look at the set, if we then analyze the section over here and we talk about what actually happened to price over here, because it's very interesting. So yeah, so we were planning for this trade to actually go and take out the lower low, because obviously the bearish structure was progressing quite nicely. There wasn't really any signs to suggest over here yet that price was going to turn, but once price did start coming to this demand zone over here, there were very subtle clues that the market gave that the market was turning. So if we were to go on the lower time frame, we know at the highs and lows, when the new high or low is printed, if a market is going to shift, it goes through a specific structural cycle. So the first trade you always get is the inducement trade. So if you see over here, when price is coming and hitting that demand on the left, obviously it's not hit the extreme demand level, but you have building up of relatively equal lows. And let me highlight those. So anytime you get formation of relatively equal lows or highs, that should be a clue that something in the market is about to happen, that the market is giving you a clue that the market could turn. And over here, obviously, once equal lows were generated, equal lows were swept. If we go on slightly even lower time frame over here, you had the order flow shifting, which basically gave the first entry on the inducement. So we know before the market turns at a high point or a low point, once a new structural high or low is created, the first trades you always get are the inducement trades. So if you look over here, we had building up of liquidity, price hits into demand. Over here, it creates a lower high, higher low. And once it breaks down over here, you've got the first shift in order flow over here. So that's your external break over here. Price then went up, this liquidity generated over here, comes down in order flow. So you've got order blocks mitigating, then you break down over here. So that's the second shift of order flow. And I'll just mark that number 2, the internal order flow break. Price then breaks across here. So that's the third one. And then you got the fourth one. And then you had the entry on this leg, on the inducement leg, just right there, right? And then, so this was the end of the day, coming towards the end of the day at key algorithmic time. You had price shifting. So at that point, if you were in the sales, we should have got out of the sales and basically been in the buys, right? So price then traded towards the end of the day, because now it's bullish structure over here. It's creating higher highs and higher lows. If I go slightly higher time frame to the 3 minutes, so I've marked out the structure points as it's progressing. So we've got 3-minute higher highs and higher lows building. One of the key issues that traders will run into, especially on lower time frame, right, And it's an issue that I think is quite prevalent for traders to know. When does the market actually go from bullish to bearish and vice versa? So over here, you can clearly see you got 3 minute higher high, higher low, 3 minute higher high, higher low, 3 minute higher high. And obviously, this is a breaker structure to the upside. And once this low gets broken over here, that's a change of character. So that's the first time the market has basically changed character. But we know, just like on this point over here in the overall scheme of what's about to happen, the first shift is always your inducement. So this, just like this leg is an inducement, this section over here is an inducement on a fractal scale. So if I write this down and make the font slightly smaller, let's make the font slightly smaller. So this is your inducement section, right? And the problem here is you have to take care in marking the structures correctly, because over here, although you have lower low, lower high, lower low, this is not a change in the market direction. Yes, it's a change in the internal trend, but you can see that low has never been, this low over here has never been violated, right? By price. Price has never gone on to do this, and therefore you cannot say the market changed structure direction here, right? It did change structure on an internal time frame here. That's correct, but it didn't change direction. That's the key. So you got price pushing up. So you got price pushing up, yeah, but that structure is still intact. It hasn't been taken. So you can't say the market has changed, changed its direction, right? Same with this one. So you got price pushing up, you break down, but you haven't broken this low, right? So this is, you have to take care on a lower time frame and a higher time frame when you're doing this, because this is what's going to screw and mess people up the most. So after this point, we higher high, higher low, higher high, higher low, higher high, price breaks down. So this is the inducement, and over here you've got an internal trend on a 1 minute, lower low, lower high, lower high, higher low, lower high, higher low. We break down here and we fell forwards. If I then go on the 1 minute time frame, so you have your inducement section, and then this, as I've highlighted, you have your liquidation section, right? So when price then on the liquidation leg is coming, and also bear in mind, we are tracking structure here, but we're also tracking the daily cycle on this play here. And obviously over here, we have now also shifted. This is probably 5 minute structure over here, right? So 5 minute structure has now become bullish. And if we're going to buy up even from this POI over here, if that was the idea, price has to come down. But we know, just like there was an inducement and liquidation play here, this is the inducement and we're looking for the liquidation trade. So of course, over here, we're coming into some sort of supply level on this candle over here, right? Because you've got liquidity over here. We got an order block, the last buy candle, which caused the break of structure, and we got liquidity left of the order block. So we're coming into some key level of supply in the market. And over here, if we analyze the market, what it's doing. So you got 1 minute structure here, 1 minute higher high, higher low. So you've got a breaker structure here, and once this low gets broken, that's a change of character right there. So price is now change character. So once we had the inducement, liquidation, now you've got the actual true change of character. Over here, price reacts to the flip zone. We got minor liquidity being built later. Price continues to go down over here, lower low, lower high, lower low. And then on a lower time frame, you got these shifts going up here. What is it trying to do? It grabs this liquidity. We're tracking the structure on this leg pulling back into the external structure itself. So you've got, if I mark it out with colors just to make it easier for everyone, you've got higher high, higher low, higher high, higher low, higher high. So again, this is a breaker structure over here, and you've got what? You got a change of character over here. So you break a structure, change of character. So this is the first shift. So again, this is your external shift. This is your second internal. Come back again, take out the liquidity over here. Boom. And we're tracking the structure again. So again, break a structure, change a character, and the entry would have been, the optimal entry would have been here for the sell. And this would have been a very nice trade at a key time in the market around 3 to 6 in Asia. And you would have really been just TPing either at these equal lows here, or at this equal lows here would have given you a 1 to basically 1 to 12. This would have been the safest TP. Or if you're feeling a bit more adventurous, you would go aim for that second wick, right? But really, the TP at those equal lows would have been the optimal trade and 1 to 12 risk reward, right? So price then trended down. Obviously, it left Asia 6 o'clock, 7 Frankfurt opens. Frankfurt just continued to push lower. And then we got the start of London session. You got lower low, lower high, lower low, lower high. Again, you have to take care when you're marking out the structural structure here, because you can get lost in it, right? So just like over here, they give you a mini structure which isn't really structure, it's part of liquidity. So this is the main issue with when you're analyzing the market, is the structures aren't going to be that clear. So lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. You got lower low, lower high. So you got market progressing nicely downwards. So even minor micro structure over here, lower low, lower high, right? So price then comes over here, and then we actually take out this low, right? So once it takes out this low, again, you have to look left. So if I go slightly higher time frame, we have to look left and look where we are, right? So once this has broken this, where are we? We're still within that demand zone, and the mistake traders will make, once a new low is broken, they will stop analyzing the structure. So over here, we're still within that demand zone, right? We've basically done the inducement trade, we've done the liquidation trade. Now we can look for a reversal to go higher, because just here we had inducement and liquidation. We've got the inducement trade, and this is the entire liquidation section. So if we then go lower over here and we look at the market over here, what it's doing, so you've got lower low, lower high. So again, this is the breaker structure over here. And then you've got over here, once it breaks down, change of character. So this is the first shift. So this is the external break. Over here, you've got some sort of micro 1 minute trend. Once this breaks down over here, you got you got the second break of order flow, right? Price then goes up, and what does it do? You've got structures being built here. So if I mark this out here, got a 1 minute higher high. You've got 1 minute higher high, higher low being built over here. Price then moves on, breaks. This is the third shift over here. So really, you should be looking for entries after the second or third shift, because of the more confirmed entries. Price then moves up over here, all across here. You've got liquidity, so you've got equal lows over here. You've got trend line liquidity over here, and price comes into the last order block again, sell to buy. And again, the entry here would have been pretty nice for the buys. That is the most confirmed move, and you can see the entry here would have been a very tight stop loss, giving you a nice risk reward to basically go back towards the high. So I hope that made sense on that section. It's quite a tricky section, and again, you have to have that higher time frame perspective of what's going on in the overall structural segment in order to catch that move. And basically from here, the optimal, and it's all about not getting every pip in the market, but kind of thinking about where would be the best place that when the market moves, that your TPs are going to hit. Again, if you're doing short-term trading, this high, this lower high, again, would have been okay. Yeah. If you're looking for a longer term play, you would be looking for those Asia highs. So you would aim for somewhere around 25, 26 or 25, 25, 25. Anywhere here would be good. And that would give you a 1 to 30 R. So you can already see the buys here. I don't know what R they were over here, 1 to 12, and this would have been a 1 to 30 trade. That's if you're trading the markets how they're supposed to be trading and accounting for structure, tracking it, entering on the correct order flow legs, etc. That's if you're doing it correctly, and it is possible if you do it, and if you're very meticulous with your analysis. That's why I'm going through it candle by candle, right? So the next couple of days, market basically trended up. We started creating liquidity. There was another entry here in Asia, because it would have been the fourth shift. Again, you have to track structure here. So again, 15-minute structure is being built over here. Over here is either 30-minute or 1 hour structure. So this is not labeled, but this is 15-minute, and this is 30-minute or 1 hour. You can clearly see 30-minute time frame over here. This is Friday. Again, NFP day is going to be tricky. we know that. So, but you can see that this, I mean, this is very rapid price action. So you shouldn't really trade NFP because again, it's news, it's volatile, but price does respect the rules of the technical play here because bullish from a structure point, we are 30-minute bullish. All it did was it spiked down. So there were internal trends there. I remember we sent this trade on the public telegram, right? Again, price can continue to go lower. It's NFP, it's a volatile day, but it respects that 30-minute structure. It spiked down 100 points over here, more than 100 points, 130 pips into your last sell to buy zone. And then we got the move up into grab this liquidity into here. And then we sent the trade at 130, 142. You can see that here. We sent the trade over here. So if I go back on the chart, on my chart, again, once a new high breaks, the the default reaction everyone has is to stop being an analyst because they get sucked into the psychology of that candle expressing quite in a quite an expressive manner, right? Just like I described here, once this low gets broken, you go into freeze mode, right? And this is a very typical reaction that you'll experience that once a high or new low is being made, you're gonna freeze up. But the point is you should not freeze up. You should have to build that awareness that some sort of structures are going to be building that new high or low. So over here, you can clearly see once that Asia high was swept, we got higher high, higher low, higher high. Obviously, this is a break of structure. Once this breaks down, change of character. Over here, price comes back. Over here, breaks down here again. So you got a lower high being built. Again, another breakdown over here. And again, the entry here would have been the most optimal entry once this low got broken over here. And you can enter here, or if you want to give yourself some room because it's more volatile, you can enter there. So my preference always is if you to always give yourself a bit more room, especially during volatile periods, because allow the trade to run. In the context of how many pips it runs, yeah, it affects the risk reward slightly, but it gives your trade the most optimal chance to run. If you were even feeling more hesitant because of volatility, you could even put it above that 32 high. That was reasonable as well, to be honest with you. So that was the optimal trade over here. Price then goes lower. Obviously, this is liquidity. This is not structured. You cannot. Once this breaks down here at equal highs, you cannot do the lower low, lower high, lower low. This is structure that's progressing off liquidity. So you've got liquidity over here, right? You've got liquidity, and then off the liquidity, you've got structure. So if you've got, oops, so let me draw this again. So let's say you've got a clear structural trend over here, right? Then you've got some sort of liquidity being built here, right? And then we continue to build structure here, right? Yes, it's progressing structure, but all of this section will get run later. And the actual true place that price wants to come up is the sweep. So if you're going to continue to look for trades, do not look for the section in this section here because it will not work. It will work momentarily again and again. It's a very volatile time. You're probably going to get taken out. So you wait for price to return. And over here, you can see got higher, high, higher, low, higher, high, higher, low. This leg sweeps liquidity, higher, high, higher, low, higher, high. We break down over here, lower, low, lower, high. So you've got the second entry here. But if you were to enter on order flow here, you'd get taken out. So remember that this is something that's going to trip people up. So not all structure in the market is true structure. Some structure is false and it's based on liquidity. So, right. So, and again, once price is progressing, again, so a lot of people, when they're in the trade, they will forget to track the structures that are breaking. So you always have to zoom out and look. 1 hour structure broke, and again we got a pullback, and prices come back down over here, right? So this has been a pretty nice. I don't know how many pips, 400 pips from the trade. So at this point, the next thing I would do is I would go and look at dollar index, which is the index which the dollar moves on, and look what the market is doing. And if we go on the chart of the dollar index on a slightly lower time frame over here, you can see when this is when gold hit the all-time highs, and you can see this is the sell-offs all the way here when the dollar got stronger, and this is when that from that section when basically the dollar started getting weaker and gold reversed from this point on, right? So you can see this, the reason why it reversed all the way here is again because we had 4 hour external structure. It had made a 4 hour external higher high, so it had to come make an external higher low over here. Just like gold has broken 1 hour structure over here, dollar index has also broken 1 hour internal structure. So the 1 hour internal is now bullish. So this is your second shift of order flow, and price essentially, I believe, is going to come back retest these levels, either 100.80 or 100.60, and they're going to get bullish expansion. That means this week on gold, we're looking for gold to either retrace up to 16 or retrace higher, because again, it has broken that 1 hour structure. So this is the 1 hour lower low now. And you've got liquidity here, you've got liquidity here, liquidity. So it could retest this block here, and this will be the sell-off. Again, once this low is broken, again, the key lesson here is track structure. You got 1 hour lower low, low, 1 minute lower low, lower high, lower low, building up liquidity, lower high break. So this is your first shift, second shift, third, fourth shift, and you've got the entries for the buys. So the key takeaway here is really track structure. And once the previous highs and lows are being broken, track structure on a lower time frame. Because when you're in the trades, it's easy to forget to be an analyst, continue to watch the trade, and then before you know it, it's a reverse break even, and then you've lost 400 or 300 pips of profit. So I hope that was useful for you guys. In summary, we've gone over what's been happening to gold. I went over candle by candle, basically the section here. We didn't really go on the daily cycle play because, again, that's more advanced detail, but I went over candle by candle what was the optimal way to get the entry here into the buys, into the sells, what your thought process should have been when it's breaking this low, because it's all about building that. What is that thought process, right? So it's repeatable. Just like over here, we did the same thing over here, and we did the same thing over there. So, and then we spoke about just setting profits, where you should have been setting profits and how you should be thinking about profit taking. Was it's all well and good big trade, but if you don't set the appropriate profit level, which is based on where the most likely liquidity is going to get hit, it won't matter. And then we spoke about here how we got the entry. And again, it was at a key time. We're looking at dollar index as well. And again, to summarize where we're expecting gold to go this week, based on dollar index needs to come down here as well. So I hope that was useful for you guys. This is your first market recap Sunday. Obviously, expect the video tomorrow where we're going to be talking about money management. And yeah, we'll keep it rolling, guys. And I hope that was useful for you guys and basically got you guys thinking in the right kind of way on how to attack these markets from a higher time frame perspective and a lower time frame perspective. The lower time frame play again is intricate. You are going to have to spend time on the charts, basically marking out these structures, because again, the trickiest part is to know in real time when the market turns from bullish to bearish, and that is a skill that you have to basically understand at what point the structures, because again, over here, the structures are going to look very confusing. But if you label them correctly, you should be able to work out, yes, this is when we had the first break. So this is the first change of character, which you induce to it. Then you got the liquidation, then you got the true change of character, etc. So hope that was useful for you guys, and I'll catch up with you guys very, very soon.